Hello and welcome to another edition of Real Talk. Thank you so much for joining me. Well, we've had a very interesting 2 weeks in the property market. So despite investor interest rates being increased, we've had 73.9 and a 72.7% clearance rate respectively for the last 2 weekends. So there's been a few predictions that we're going to see a drop-off of foreign investor purchases, particularly in the CBD. So I've done some research, and what I've found is that there's a percentage of those investors that are now actually going out into the rural communities, looking at buying businesses as well. Of course, the interesting thing now is the banks are coming out saying that they're not too keen to do rural lending from an investment point of view. So I did some more analysis and really worked out that so much of the Australian rural community land has actually been passed down generation over generation. So there's not a lot of intrinsic debt on the actual land other than overdraft facilities to run a lot of these properties as small businesses. So now with a bigger intake or influx, I should say, an uptake of rural property, that if it's investment, it's often coming with debt. So I think we'll see a lot of the banks probably, really slowing down the sort of loans that they want to do in those areas. But talking about casting further afield, I've just spent a bit of time in Tasmania, and I've done some research on some of the land holdings there. And Launceston, you can buy a 2-bedroom, 3-bedroom home in Launceston for about $230,000 in an area that's got reasonably good employment opportunities. The foreign investment uptake in properties in Tasmania is on the improve as well, on the increase, I should say. So we're seeing a lot of people sort of going to other markets other than the Melbourne, Sydney investor markets. So I think we're going to see some quite dynamic shifting, but certainly for first home buyers, they're saying there's a lot of migration to places like Launceston, Devonport, Hobart, South Australia, where the properties are cheaper and there's still relative employment opportunities. So it's quite interesting. But there's employment has stayed pretty much the same, remembering that we've had a real drop in unemployment. It's stabilised, but the economy's actually on the move. So, and that's really what the Reserve Bank's been wanting, and that is to bring unemployment levels down and spur economic growth. And it's certainly reflecting, because the US and Australia have both had good economic results and slowing in unemployment. And of course, the US are really keen to start putting up interest rates. So they've sort of come out and said there's probably going to be another interest rate rise in the US later this year. I certainly think for Australia, we're probably in a good position now. Investors are being hit with up to 1% extra in interest rates. And I certainly think that we're going to see a little bit of a slowdown in the short term in terms of investors deciding, do I go principal and interest, which is a bit of an unknown area for a lot of my clients. I've had quite a lot of phone calls on it recently. So here's the thing. If your property is positively geared, if it's causing you no stress and you have surplus income, it probably is a good time to consider going with an investment loan that is up to 0.5 to 0.75% lower if you're going to pay off some principal. I'm a really big advocate for reducing debt overall. I think the buy well, never sell concept is certainly here to stay. So if you can be reducing debt with a lower interest rate, it's a really good opportunity. For those in the mentor program, remember, phone calls are free, emails are free. Pick up the phone, write me an email, happy to give you some advice accordingly. Might even pay to do a few more property investment analysis and actually look at the various forecasting. But I think it's a really great time. We've just had the tax year tick over. It's a great time to get our taxes done, review our property investment analyses, and don't forget to take the time to look at your insurance policies as well. All those little things that come up for review. It's a great time, and it's cold. Well, a lot of us spending a bit of time indoors on a Saturday or a Sunday. Pull up your computer, work out a few of your investment decisions moving forward, and flick me an email. Love to help out. So I think in terms of on the property front, it's all systems go. The market is not showing any signs of slowing, and I think we're all very tired of the talk about, it's going to crash, it's going to this, it's going to that. I think we have got a very robust, growing population in Victoria, particularly in Melbourne, and I think we're going to have to come up with more innovative ways that we can house more people in a city and within the rings moving out. So challenging times, but with challenging times comes opportunity for great innovation. What a lovely note to end on. Thank you so much for listening.